Please read this disclaimer carefully before proceeding further.
Welcome traders to analysis of gold XAUUSD. Thanks for joining me here. My name is Vic. If you have not gone through my previous analysis, the last week's analysis, please go through that before watching this one because that will start to make more sense. Now, now we are not going to go through entire analysis again because that will be like a waste of your time and my time as well. So what we're going to do is kind of update, give you an update on what happened after the breakout. So please do watch the previous one. You'll find the link of that analysis below this video, or you can find it on the channel as well. Now, so what gold has done so far, it has come to one of our targets. In fact, it has reached three targets, three bullish targets, and now it is sitting around 1900 level here. Now, 1900 is a round number, so there was some kind of expectation for it to fall down, and that's what it did. Right, it just showed a little bit of reaction here, but our target is near about 1910 or so. So what we can expect is that the gold can actually do another round to go up around 19.7, 19.10 or so, or maybe even a little higher before it can start to fall down. That's one of the expectations. However, let's first focus on the structure, the patterns and the structures which have been formed. So let me show you what patterns are evolving, and I covered that in the previous analysis as well. But let me quickly show you on a clean chart how they look. So right now we have this W pattern here, okay, which is an extended one. And when W pattern completes, the market is expected to fall. Now, that does not mean that it can fall further down like in a huge fall. I'll come to that. That's a very important point as well, but I'll come to that in a second. So that's one of the W patterns here. Another W pattern that we have got is this one, which is not completing here. That is probably going to complete even a little bit higher. So that was going to come somewhere around here. And that will also form another W pattern, which is like this. So something like this, right? So these areas, this particular section here is very important for gold because once the market has come into this zone, I know this is a huge zone, but if you talk about swing point of view, from swing point of view, or if you talk about multi-week or multi-month basis, then this is a very important area for gold because from here it can start to take a downward journey. There is this liquidity zone that I've already mentioned few times. So gold can actually spike up above this before it starts to fall down. So this whole thing is actually very, 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 very important for gold. Right now, where it is standing, that is also kind of a resistance area, so it can fall down. So we are reaching a zone where gold has more possibility for short rather going long. Now, that does not mean that you cannot go long. If you find a good opportunity on daily basis or smaller time frame, right, obviously you can take that and you can manage your trade. But be very, very careful because now we are struggling with this structure. One of the W pattern is completed. Okay, it is completed here, but there is an extension here as well. And then we will have another W pattern here which is also complete and somewhere around here. And when W pattern completes, the market goes down. So all of this area is actually kind of a resistance area. So if you are looking for huge profit targets, or if you're swing trading or position trading, then this is not a good area to go long on. You can go long here, but you should manage your positions, take one step at a time, maybe go in, collect the profits and get out, right? So that's how it should be. Now, other things here is this, I've already mentioned this few times, but all of these are liquidity areas. Remember, this point, this was a double top around 1680, right? The market came down and almost immediately started to rise up, and this actually created a huge liquidity area. And what happened around there, on one fine Sunday night, actually, it happened over Sunday night, I think, or Monday morning, when the market opened after the weekend, this actually came below the previous low, right? Let me show you what I mean. So this actually came lower than the previous low. So this was the previous low, right? Came little bit lower than the last low, right? And it collected some of the stop losses and started to go up. Now it did not actually go below this. I was expecting that to happen a little bit I was expecting it to go a little bit down, but that did not happen. Why is this happening? This is happening because there were stop losses below this, right? And they collected some of that, and that pushed the market up, which also means that this sort of move was very unexpected, and it can happen again. Market market usually cause, like, huge pains, like, when you are not expecting them to actually cause any kind of pain. So this was the liquidity grab here at this point in time. And what I can see is that there are several liquidity grab points available on gold now. So this is one area, this is another area, this is obviously an area, this is an area, right? And so far the market has been going up, up, up. So you should be careful that, at some point in time, this can actually it can actually fall down. So you have to be careful with that, right? So expect the unexpected. If you are not expecting something like a drop like this, or maybe, like, in steps, then you should expect that, because that's how the market works. It usually causes, like, a lot of pain and pain here. Now here we also have a liquidity area here, which I've already mentioned before. So you should be aware of that. So the market can actually go into one of these areas, right? If you're getting good trades, that's fine. If it goes above this, then it can, like, probably going to just touch and then fall back down. So these are some of the scenarios which you should be aware of, and most of the retail traders actually are not looking at these, because they are very narrow focus. They are focusing on one trade or one candle or one day or one time frame. They are not looking at the entire picture. So this is what you should be looking at. Okay, so this was the higher time frame scenario. Now let's go and um, look at our analysis. Now on our analysis, the market has actually touched, so sorry, even before that, we expected market to come down last week and perform like some kind of test around 1950, or maybe at the most 1939. And this is what market has done. It came to 1950 here, and then it started to go back up. So this is what we were expecting. We were expecting market to go up, close this gap. There was a gap around 1873, 995, and then there was a gap around 1886, 503. Right. So these two gaps were filled, and in this process, the market hit our this target, which was the gap. Second target was this one. Third target is this one, 1900. And the fourth target, which is still available, is 1909 or 1910, near about that. But ultimately, it has reached this FCP zone. And because the market is there in FCP zone, I expect market to come down. But that may not happen immediately. Market can actually go deeper into this FCP zone and then fall back down. Now, if it starts to fall down, then what are the support levels, or what are the target levels? Now all of these levels which are available there, they can still act as support and resistance, but let me actually give you better ones using Fibonacci. In our methodology, we use Fibonacci for almost everything. So let's put them here. So that's one of the targets here, 1867, and then we have 1850, near about 1850 area or so. So these two targets. So if the market starts to go down, let me actually adjust them a little bit. Yeah. So something like this, and like, yeah, that's perfect. Right. So if the market starts to go down from this FCP zone, then we are looking at 1886.5 as one target, 1873.9, 1868.56, and then this FCP zone, which is around 1860. Then we have 1850.284 as targets. So these are all the targets which can actually be achieved if the market starts to go down. Now there is a trend line which is happening here, which is actually running right now. So if the market actually violates this FCP zone, right, if it becomes extra bullish, remember we were just talking about this huge W pattern, right? If it becomes if this FCP zone becomes a support zone, then market is expected to reach somewhere in the middle, somewhere around here, and that will be approximately 1928 area or so. So let me just quickly measure that. So if I just draw it from here, okay, and then draw from here. Yeah. So that will be a kind of intermediate level here, which is near about 1928 or so, right? It I'm thinking of actually like, this level as 1928 as like, intermediate level. It may market can just push through it, or it may or may not even act as a resistance here, but something to watch out for. Okay, so these if the market actually goes above 1910 and this FCP zone becomes a support zone, then 1928 will be target. Then we have 1941. This FCP zone will be there, and 1951.58 will be the next target. If it continues to rise, then we have 1967.8 level, this FCP zone. At each of these levels, because all of these levels can act as a resistance, at each of these levels you should be taking partial profits, or you should be getting out of a position, because these can act as resistance and the market can actually fall down. So if you are long from here for whatever reason, then you must make sure that around 1928 you are collecting your profits, or maybe you can look for a short position after that. So each level can act as profit target and can also act as resistance, maybe like an opportunity area, so something like this. Okay, but remember what I just mentioned, there is a possibility that this sort of move can happen suddenly, because they will try to grab the liquidity which has been actually built around this trend line, this area, this area, this area, and this area, right? All of this is available for grab. So make sure that you are trading one step at a time, and you're not just following like, just your bias. Stay objective, just watch the chart, analyze the chart multiple times, and then see what the market has been doing. So this gap has already been filled, so I'm going to remove them and convert them into lines, because now they will act as support. They can act as support now, because they were obviously targets. So these are all the levels here. Okay, and what else? Right, so let's look into the Vata and Visage as well. Now, remember in previous analysis, I gave a few levels here which were predicted by Vata and Visage. And how does it work? It simply is based on the color system. So here we had blue means buy, and we had a buy signal. This was the local target here. But all of these targets are coming from different time frames, higher time frames basically. I'm looking at daily time frame right now. All of these targets on the upper side, they are coming from weekly or monthly time frames. So these are all the targets which were given: 1878, 1890, 1905, 1928, 1965. In fact, actually, 1965 I have just added because it now has started to appear on weekly chart as well. Then we have 20, 26, 98, right? Now, not all of them are going to be reached because the market conditions can change. So you always need to have a little bit of analysis or a little bit of sense of structure and direction. Right now, market has been able to reach three targets here on Vata and Visage. So the first one was around here, which was 1878. Then we had 1890, sorry, not three, but then we have this one, 1905. So 1905 is kind of like, target which can be reached next week, depending on how market moves. But so far, it has been able to reach from here, it has been able to reach three targets, one, two, three, and this will be the fourth one. If it continues to go higher, and the market supports that momentum, then it can reach 1928.76, that level as well. And these are all reported here on Telegram group. So this is how it used to be last week: 1878, 1885, 1906, 1928. All of these targets were open. Then it reached 1878 here, and then it reached 1890, and towards the end of the last week it reached near about 1905, but it never actually touched that. So that target is still open. So gold is still looking bullish, but all of these levels, as I mentioned, like, it is reaching an area where we should start looking for a downward move very soon. So wait for a confirmation. Do not just jump in. Always wait for a confirmation. If you have Vata and Visage or some other tool or some other technique to find a confirmation, that will be the best, but always wait for a confirmation before trading. Okay, so this is our analysis for this week. Hope you enjoyed this, found this useful. If you did, make sure to hit the like button, subscribe to the channel, and share it with other traders and trading communities so that they can also benefit from it. And I'll see you in the next one. Have a great time.
If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.